Welcome to Cambridge House Live. I'm Bridget Anderson and I'm joined by Brent Cook, who's the author of Exploration Insights. Thanks for being here, Brent. Nice
Always good to be in Vancouver.
Let's start off with some comments that you made recently, equating this downturn to one that we saw in the 1990s. Are there differences that you see that investors need to be aware of?
I think so. I think a lot of people are looking back to the 2008 bust and saying, well, we should be bouncing out of this. And now's the time to be buying all these junior stocks that are selling for pennies. But what brought us out of the 2008 bust had nothing to do with us. It had to do with the banks about to go under and the money being pumped in. And we were just where the speculative money went into. So we were just carried along. Nobody really cared about this sector. Right now, this reminds me of the 97 to 2002 bust where nobody cared about this sector and there were other things going on. In that case, it was high tech. It's the big stocks markets. So I think we're in for a long, hard time where nobody really cares about this sector. New money coming in is going to be few and far between.
So what lessons can we learn from looking back at what happened in the downturn in the 90s? And how can investors then find their footing now?
That's a really good point. I'm going to talk about it today in my talk, by coincidence. But that was when I joined up with Rick Rule as his mining analyst. And it was a hard lesson for me. But what happened is that we were able to buy over a period of years companies with solid assets that we could see had economic deposits that nobody cared about. We kept buying and buying and buying. And eventually we came out of this, and we're going to come out of this again very strong because the underlying fundamentals are that we are not finding and developing and putting enough mines in production to replace the copper, the zinc, the gold that we're actually producing. Mm-hmm. So there's a squeeze coming, and that squeeze is going to just really mean that the economic deposits that we can buy now at a discount to value are going to be worth a lot of money. So this is a fantastic time, but I think we're going to be doing this for years.
And are there certain geographical areas that stand out for you when you're looking at it through this kind of lens, or does that apply really right across the board?
I think you need to be aware of, you don't want to be putting money into a project in a country that's run by what I would call naive politicians. Call it Ecuador, Mongolia, where they don't understand the amount of risk and capital that goes into finding a deposit. I mean, the industry as a whole spends, I think it's $2.3 billion to find one tier one deposit. That's the industry as a whole. So this is a very high risk. And once you get one, a politician will look at it and go, well, look at all the money they're making, but they forget what was spent to get there. So I think you want to, you do, answer your question shortly, you do want to be jurisdictional risk aware.
Right. When looking at some of the precious metals, there's been a lot of conversation, a lot of discussion about what's happening to the price of gold and the price of silver, mostly around the price of gold. What is the impact on the major companies for that? I mean, aside from what's happening with gold itself, what do you see as some of the implications of what's going on? They're in real trouble, and we just talked about this in this week's letter. Their all-in cost of production on the whole is between $1,300 and $1,500 an ounce for most of the major companies, and that includes all your costs. So bottom line, they're not making much money at these prices. So what they're doing is they're cutting exploration. They're trying to tweak their mines however they can to get a couple more pennies per ton, and they're stopping development projects. And this applies to copper as well. So new production is not coming on. People's projections. Which goes back to what you said a couple of minutes ago. So when that volatility smooths out and we'll see prices come back up, it takes time for these companies then to build back that capacity, and that's where you see that squeeze. I
think so, for sure. Certainly in the copper space, the PGM space, I think gold as well. Honestly, these guys are in big trouble. We're going to see some major companies go under, or at least start shutting down mines.
And if you're saying that about the major companies, I mean, I can only imagine what you would have to say about the junior mining companies then.
It's not going to be easy because when they're shutting down mines, stopping exploration, they're not out acquiring very much. But the mid-tiers, now that's not all bad. I mean, the mid-tiers like B2 and Mandalay and maybe Yamana, this is prime time for them. These are companies that are small, doing well, They can really pick what they want.
Well, and I'm glad you said that, because despite some of this doom and gloom we're talking about, there are real buying opportunities too. This presents a buying opportunity, and so investors shouldn't forget that.
The secret to selling high is buying low, right?
So give us your advice then. Besides taking a look at what's really in the ground, how else should investors be taking a look at these companies given the kinds of fundamentals that they're seeing going on right now?
Well, I think looking long term, right now all the markets, it's all so short term. No one is really investing. They're all just gambling at the table, and they're following each other to different tables. I think looking back long term, there's no doubt we're going to be producing more than we're finding and putting into production. So those prices have got to come up, and the few projects that are legitimate are going to be valuable. So in the junior space, focus on quality management, cash, a viable business strategy, and a good project. I mean, that's obvious, you always do that, but now more than ever.
There has been some discussion that it's different this time and that there's going to be a real cleansing of the market. Do you think that's a necessary step?
Yeah, definitely. Mother Nature, as the Earth evolves, makes anomalies. That's just how it evolves, right? And what we've had over the past few years is too many companies coming in, a geologist picking up an anomaly and raising money on it. And the reality is, on the whole, the averages are 1 in 1,000 anomalies are going to be a project, turn into an economic deposit. Now we're getting rid of those ones that are obviously no good.
And as a geologist, I mean, you look at it a little differently than other people do too, I think.
Yeah, I think so. That's my job.
All right, well, we'll leave it there. Thanks very much, Brent. I really appreciate your insight.
Thank you. Glad to be here.